money, money. Money, money, money.
Crazy about my money. Money, 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 money. Crazy about my money.
We are 5 months away from the presidential election, and we're starting to get a lot of questions about, what to expect going into November. So I have Brady Raanes here with us. He's our Director of Investment Strategy, and he's going to kind of answer some of these questions that we've been getting.
Thanks, Kelsey. I appreciate it. I had fun researching this. This is a fun topic for me.
Yeah, so let's start with some history. This isn't the first election rematch we've seen, between Biden and Trump, correct?
Yeah, that's right. Election rematches are not that uncommon. The most recent one was in 1956 when Adlai Stevenson faced off against Dwight Eisenhower. Of course, Eisenhower won re-election in that instance. But election rematches have happened 6 other times, so not an incredibly rare thing.
But it would be pretty notable if Donald Trump did win, correct?
It would. It is rare for a president to win twice in non-consecutive terms. The last time we had this was back in the 1880s. And so it's rare to see that if Trump ultimately is victorious, that comeback would be a bit of a surprise, historically speaking.
So it is June right now, early June. Who currently is in the lead?
So we look at polling from 538.com, which is a polling nationwide polling service that I think does a good job. And right now they have Trump in the lead by about 1%, but those polling numbers were really through the end of May. And so it kind of remains to be seen whether or not Trump's legal woes will play on voters' minds as we get closer to election.
That's a pretty fair point. It'll be interesting to see if the legal woes do, move the needle at all for those voters. Historically, the economy has played a crucial, prediction, I guess you could say, going into the election. So what are you seeing right now?
So there was an economic advisor back in 1992, a guy named James Carville. He was Bill Clinton's economic advisor. And he made the statement, it's the economy, stupid. That's what's on voters' minds. I think you could probably change that and shorten it a little bit to say, it's the stock market, stupid. And it's the short-term performance of the stock market. What we've seen in election after election is the performance in the stock market in the 3 months leading up to election day is a phenomenal predictor of what actually happens on election day.
How often has that held true in the past?
So believe it or not, going back to 1928, this one predictor of how the stock market's done in the 3 months leading up to the election has an 87% success rate in predicting the outcome. Turns out if the market is positive in the 3 months leading up to election day, then the incumbent party typically wins re-election. If the stock market performance is negative in the 3 months leading up to election day, then the challenging party typically wins election. And so that one performance measure has a phenomenal track record of predicting who wins.
Wow, that's interesting. So you've talked about the 3 months leading up to the election, but what normally happens during the summer, for an election year?
So I went back and I looked at the last 6 election cycles, and I looked at the performance from June 1st to November 1st just to gauge what we typically see during these 5 months during the lead up. And what I found is it is a real coin flip. You have some good years and some bad years, but on average, the average performance of the stock market in those 5 months is a whopping 0.1%. So as flat as it could possibly be. Now, there were a couple of outliers there. We had the 2008 great financial crisis that really began during the summer leading into the 2008 election, and things got ugly and the market fell 30%. We had COVID, and obviously that skewed things because the stock market was all over the place. But if we exclude those 2 years, then you still get a slightly positive return, 2 to 3% during the summer.
Interesting. Regardless of the outcome in November, the investment community knows what to expect, whether Biden wins or Trump wins. And the stock market has done pretty well under both terms. And so is there any kind of thoughts you have about which president might have a more positive impact on the economy?
You make a good point because under both presidents, they both had economic challenges. COVID dealt Trump's presidency a big blow initially on just the uncertainty of what COVID brought. And then, of course, when Biden came into office, we had supply chain issues. We had rising inflation costs that were having to be dealt with. But aside from those issues, both presidents can claim pretty good job numbers. Employment's been low, corporate profits have been high, the stock market's done well under both. And so it's really hard for one or the other to make a claim that they are going to do better economically speaking or from a stock market performance standpoint.
But they both have pretty, different policies, that they want to enact. Biden supports clean energy while Trump wants to increase the oil output that the U.S. has. They have very different, viewpoints on healthcare. Biden wants to, keep, Affordable Care Act while Trump wants to repeal it. And Trump wants to repeal, or I guess you say curb back the restrictions that have been placed on the banking industry that Biden has placed. So what do we kind of you see when it comes to those different sectors of the economy?
So it's surprising to me because it's not always clear, even though you can understand a candidate's stance and statement, it doesn't always translate into market performance. So for instance, you make a good point with the energy sector. Energy stocks actually did better under Biden's watch, despite the fact that he wasn't a big fan of fossil fuels and oil. And so energy stocks outperformed during Biden's tenure, but healthcare stocks actually outperformed during Trump's tenure, despite the fact that, again, he wanted to repeal the Affordable Care Act and there was more uncertainty surrounding healthcare stocks. And so sometimes it's just not that obvious which area of the economy will perform, even if we know the president's stance going into it.
So you're basically saying it's tough to make an argument that any sector of the economy is going to do better under which president is currently in term.
And so, yeah, that's true. And so much of our economy really is built on consumer spending and consumer confidence and things that the president just doesn't really have any impact over. Technology stocks and consumer discretionary stocks, those things, the president's stance doesn't make a huge difference. It's more about the economic cycle that's going to dictate the performance of those areas. And so it's tough to make a strong case one way or the other.
So to wrap up, is there anything that you are looking at in the economic data you're going to be kind of, keeping an eye on as we're going into this election year?
So the things that are going to be the driver for the stock market over the next 5 months will really boil down to expectations around interest rates. Are interest rates going to come down? And how quickly are they going to come down? The stock market is going to be keenly watching that. And then are we going to have a softer job market? We've begun to see some cracks in the foundation with jobless claims. Unemployment numbers, are those still good, are not quite as solid as we have seen. And usually that takes a while to play out. So I'd be a little bit surprised if we see economic data fall off a cliff in the next 5 months. But soft economic data could spill over into bad stock market performance, even just a little bit. So if the data stays good, I think Biden has maybe the advantage going into the election, and Trump would have a bit of an uphill battle. If it flips and we see investors begin to take profits and the stock market begins to turn down, then Biden might have an uphill battle.
Interesting. Well, thank you so much for your time, for your research into this. If y'all ever need anything from us, please give us a call, shoot us an email. But again, thank you for your trust and your confidence in us.
Money, money, money. Money, money, money.
Crazy about my money.